If you value deep analysis, real-time insight, and signals Wall Street doesn't want retail investors connecting, make sure you like this video, subscribe to the channel, and turn on notifications so you never miss what's coming next. Now listen closely, because what I'm about to break down today is not hype, it's not hopium, and it's not random speculation. XRP price is being set, not predicted, and almost nobody is talking about who's doing it, why it's happening now, and what it means for holders over the next phase of this cycle. Look, here's the thing. Markets don't move randomly. Prices don't magically explode out of nowhere. Every major repricing in financial history was prepared quietly, slowly, and deliberately before the public ever noticed. And XRP is no different. Right now, XRP is sitting in what looks like boring price action. Sideways movement, low volatility, retail frustration, and that's exactly when price gets set. Because while retail watches charts, institutions watch infrastructure. While traders argue over candles, governments negotiate behind closed doors. And that's where XRP keeps showing up. Not in memes, not in hype cycles, but in payment rails, liquidity corridors, and regulatory frameworks that don't exist for any other digital asset at scale. Let me break this down slowly, because once you see it, you can't unsee it. Price discovery happens in public. Price setting happens in private. And XRP is firmly in the second category right now. Banks are not testing XRP anymore. They're integrating. Payment providers aren't exploring it. They're building around it. That shift matters more than any headline. When an asset transitions from speculation to infrastructure, its price stops being emotional and starts being strategic. Think about oil. Think about gold. Think about treasury bonds. Their prices are influenced by traders, sure, but the real floor and ceiling are established by sovereign needs, liquidity requirements, and settlement utility. That's where XRP is moving. And here's the part that most people miss. XRP doesn't need mass retail adoption to reprice aggressively. It needs corridors, it needs liquidity depth, it needs certainty, and certainty is being built quietly right now. Regulatory clarity is not about headlines, it's about what institutions are finally allowed to do once ambiguity is removed. When rules become clear, capital moves fast. We've seen this before. Every time a market gets regulatory certainty, liquidity follows, and XRP sits at the intersection of regulation, payments, and global finance. That's not an accident. So when people ask, why isn't XRP moving yet? The real question is, why would it move before the system is ready to use it? You don't flip the switch on liquidity until the pipes are tested, and those pipes are being finalized now. This is where price setting becomes obvious. Large players don't chase green candles. They accumulate when nobody is excited. They build positions when narratives are boring, and XRP has been boring on purpose. Sideways price compresses supply, weak hands exit, strong hands consolidate. That's how you set a price floor. Once that floor is established, repricing doesn't happen in waves, it happens in steps, and those steps are violent. This is why you see sudden XRP moves that don't retrace like other assets. They're not pump and dumps, they're repricings. Now let's talk about time frames, because this is where people get wrecked. If you're waiting for XRP to behave like a meme coin, you're playing the wrong game. XRP behaves like infrastructure. Infrastructure moves slowly until it doesn't. And when it moves, it doesn't ask for permission. Here's another layer most people ignore. Global liquidity is tightening and shifting. Cross-border payments are under pressure. Legacy systems are inefficient, slow, and expensive in a world that's becoming more fragmented, not more unified. That fragmentation creates demand for neutral bridge assets, not national currencies, not politicized systems, neutral liquidity. That's where XRP fits perfectly. And as these pressures increase, the value of that neutrality increases with it. So when we talk about XRP price being set, we're talking about utility-based valuation, not speculative mania. And utility doesn't care about your emotions. It cares about efficiency, speed, cost. XRP wins on all three. That's why accumulation phases look boring. That's why headlines lag reality. And that's why the real move always surprises people. Before we continue, quick reminder, if this breakdown is helping you see the bigger picture, make sure you're subscribed to XRP Insider Network, because what's coming next will not be covered honestly anywhere else. Now let's go deeper, because the next phase is where the real shock begins. For people who only look at price charts, XRP price isn't waiting on retail. Retail is waiting on XRP. And by the time the narrative flips, the move is already done. This is how every institutional asset transition works. First comes suppression, not manipulation, but patience. Then comes silence. Then comes repricing. And finally, mainstream justification. We're still between silence and repricing, which means positioning matters more than prediction right now. Let me explain something critical. Institutions don't need XRP to be $50 tomorrow. They need it to be reliable. They need deep liquidity. They need predictable behavior. Once those boxes are checked, price expansion becomes a requirement, not a hope, because liquidity depth demands valuation. You cannot move trillions through an asset that's priced like a speculative toy. At some point, math forces repricing. That's not opinion. That's mechanics. And mechanics don't care what influencers think. This is why XRP doesn't follow Bitcoin cycles perfectly. Bitcoin is narrative driven. XRP is system driven. Different rules, different outcomes. And when the system activates, the price has to adjust to support it. That's the part nobody talks about on Twitter. Now let's address the elephant in the room. Yes, this is speculative, but it's informed speculation based on structure, not hype. No one can give you an exact price. Anyone who does is lying. But we can talk about ranges, we can talk about necessity, we can talk about inevitability. And inevitability is the key word. If XRP continues embedding itself into global payment infrastructure, price expansion isn't optional, it's required. That doesn't mean overnight, it means suddenly. And those are two very different things. Most people miss sudden moves because they expect gradual ones. XRP doesn't telegraph, it executes. So, what does this mean for you? It means patience beats precision. It means positioning beats timing. It means understanding the role XRP plays matters more than watching every candle. This is not a trader's asset long term. This is a holder's asset, and history rewards holders when infrastructure assets finally activate. We're approaching that activation window. Liquidity conditions are shifting, regulatory clarity is forming, integration is expanding. Those three forces don't align often. When they do, markets move fast. That's why I keep saying XRP price is being set now, not later. Once the switch flips, the conversation changes overnight, and the same people calling it dead money will suddenly act like they always believed. That's how this works. If you're still here watching, you're early, and being early is uncomfortable. But uncomfortable is where opportunity lives. So stay sharp, stay patient, and stay subscribed, because when XRP reprices, you'll want to understand why, not chase after it already happened. This is XRP Insider Network, and this story is just getting started.